We have on the line Yaw Appiah Lartey. Yaw Appiah Lartey is a partner in strategy and transactions. He's the Africa Infrastructure and Capital Projects leader at Deloitte Africa. Yaw, good morning to you.
Good morning.
Thank you so much for making time to help us out this morning with this all-important conversation of how to get capital as a small business.
Excellent. Thank you very much. My pleasure.
Yeah. Now, George, before Yaw comes in, I mean, let's try and see if we can figure out the size of the problem, right?
Yeah.
So we know that about 80% of commercial citizens in Ghana are informal, right? Yeah. And a lot of them are engaged in business, small to medium scale business, right? So that's the people in Aboso Kai and the people who are, the fashion designers and the pure water
the food delivery business,
the food delivery, right? All of these people who have found a way to fulfill a need of people and are able to provide a solution to people and hope to make money from it. But in many cases, some capital is required for them to get started. That is the first hurdle. And so many are falling at that hurdle, aren't they?
Yeah. Kujo, you're right on that. I mean, to make that point that indeed also government cannot employ everyone. And that is why even in schools now, most of them are pushing towards the line of entrepreneurship. How can you start your business? And how can you start your business? For these young ones that are coming out, basically, it might be difficult to ask them to use their own capital to start these business. The argument is that also go to the family. Your father has invested in so much for you to finish the university. The argument is that having invested in you to finish school, this is the time for you to even start looking at yourself or looking at yourself and not going back to them for support. But that is the time that you need that money to push that food juice that you started in school and you want to now expand the business, or maybe that food delivery business that you've got in a motorbike. You want to see how you can, take orders from people. But always the challenge has been, how do you get that money? How do you get someone that believes in this dream to finance this business? And you realize that most of them are stuck at getting the packaging right, getting the quality right, getting the standardization right, because they don't have that funds. And I was explaining to you earlier on the news that it's not only about even the access, but you also want to look at the cost of credit as well. For these young ones who are coming up, for these startups, even the argument about whether they are credit worthy and all the rest, and how that is factored in pricing of these loans is a major challenge out there. That is why we are trying to see how we can get around that challenge. Some of these financial institutions will tell you that, okay, how do you convince me to fund this business? How much have you invested in this business? How much has the family invested in this business? But also they'll tell you that the family, the friends, the there is not there. So basically we have to fall on these financial institutions. The there is not. My mother always say the there is not there.
Daren't it?
How is the ecosystem enabling and supporting these entrepreneurs and startups in this country? The various funds that are out there in terms of, the favorable rates and all those things, even the tax system and all those things. What is there for these businesses that are starting businesses? That is the system encouraging. There are research that says that most of these Ghanaian firms, after 5 years, they are struggling. So it is a real clear and present danger for these startups, for these entrepreneurs, these small businesses out there, about how they can grow from that tabletop, from that person who is actually carrying fruit juice to the office for us, mashed kinky and all the rest, bottled and all the rest, to move from just that small bag to that office and supplying most of these industries out there.
Yeah. Do you know what baffles me?
No.
You're always hearing different institutions offering funding to businesses. But then you hear of businesses attempting to access these funds.
It's a problem.
And getting turned down.
Or stuck.
Yes. So there's something that is not being done right. But what is it? And that, I hope, is what Yaw is going to help us with. Yaw, so maybe we'll start with the big question. Why is it actually difficult? Why is it difficult for an SME to get funding?
Yes, so thank you very much, Kujo, and I like the information on the background context that you guys have given. And so I think to answer your question directly, the problem or the challenge with SMEs accessing capital goes beyond just their readiness to access the capital. So if you walk to the average business in Ghana, you ask him what's your biggest challenge, they will tell you it's lack of capital or lack of access to cheaper credit. Usually that is not a problem. The problem is that they are not ready for investment. So the capital you are looking at is not only a loan from a bank, but even a private equity investor or you and I as angel investors, we are looking to invest in that delivery business. And then you walk there and it's just a one-man business. You ask him for information, everything is in his head, there's nothing on paper. So the problem with SMEs goes beyond access to capital. And I think maybe for us to put the conversation in context, we have to specifically go into the challenges of SMEs and why they are not able to access the capital. Once we discuss why SMEs are not able to access the capital, we will also help them to identify or look at how they will be able to overcome some of these challenges. And then the options available. So, Kojo, there's capital available from angel investors. There's capital available for international development partners and even international agencies like MasterCard. But a lot of these SMEs do not know. There are instances where even as Deloitte, we've been sponsored by MasterCard to do training for SMEs on pro bono basis, and only a few of them show up. A lot of them register and don't even attend. And so that's the problem. A lot of SMEs need technical assistance to support their businesses grow. And so that technical assistance is what they need first before they access the capital. So maybe to put the conversation in context, there are peculiar challenges of SMEs in Ghana, and that makes it very difficult for them to access the capital. So the first one is about corporate governance. A lot of SMEs are comfortable starting their businesses with friends and blood relations, so family members and friends. Yes, that's a comfortable way to start. But if you start the business and you are growing and you are seeking to get funding from a third party, you need to bring people who have specific expertise into your business. So people give capital to businesses and they are not just looking at the business. They are looking at the individuals running the business. So, for instance, if you have a startup, the conversation or the common principle is that startup is very difficult to get capital. But who are the individuals starting the business? So if you are starting a school and the people who are starting the school are retired educationists, so for instance, the person who is starting the school has been in the education sector for about 40 years, and his partners have also been in the education sector for about 25, 30 years. What it means is that if that school is a startup, it is starting with business leaders or management team that has a cumulative experience of 100 years, because the owner of the business, the proprietor of the business has been in the education sector for about 40 years. And his other promoters or the people who are starting that school also have an average of about 20, 30 years. So you have a business that has about 80 years experience. So someone is comfortable to give his business to that startup because the management team or the governance is right. So if you do not have the right team with the right expertise, the SME will struggle to have the capital. So I think that's the first one. If the governance system is not right, they will not be able to get the capital. The second one is the lack of unique products. So a few years ago, we had this popular tie and dye business we call Adwa Yankee, Weshia Unia. That business fizzled because obviously it wasn't a unique product. So today we have textiles that are being imported from China with Adinkra symbols. There is no way Adinkra symbol will emerge or originate from China. It means that they've come to pick our products here and they've diluted our market. So SMEs in Ghana will have to find a way of differentiating their business. If your business does not have a unique product, and I'm coming to invest in it, and I think that in the next few years, your business will collapse because other people will be able to copy the product, then it will be a challenge. So one of the things that you've seen lately is, for instance, there's hot bread. So you go in home and you see cars parked, people are buying hot bread. And somebody starts that business. In the next few weeks or so, another person parks a car by the roadside selling bread in the boot of the car. Then the next few days, there's a container that's next to that business that's selling hot bread. So it means that the hot bread business that you are going to finance doesn't have a unique product. So the lack of unique products is the second reason why a lot of SMEs struggle. The third reason, before the capital, is also cumbersome regulatory environment. So in the system that we live ourselves and where we actually currently are, and I think you mentioned some statistics, in our Ghanaian economy, there are three sectors of sectorial contribution to our GDP. There is the services sector, agriculture sector, and industry sector. SMEs contribute about 60 to 70% of our total gross domestic product. But they do not necessarily support the government agenda because we have not helped SMEs to grow. So if you go to the register of companies, about 90% of registered business are SMEs, but they only contribute about 5% of our total taxes. So that means that compliance is an issue for SMEs. Elsewhere, there's discrimination in the level of compliance. So if you're a micro business, the level of compliance is different from a medium-scale business, and the level of compliance is different from a large-scale business. That is how other economies have helped SMEs to grow. But if all businesses are supposed to file taxes, are supposed to comply with tax requirements, data protection requirements, and other regulatory requirements, the same as large-scale entities, it will be very difficult for SMEs to comply. That's why we have about 90 businesses that are registered as SMEs at the register of companies, but these companies only contribute about 5% of our total taxes. So the problem is the regulatory environment that we have created that makes it difficult and cumbersome for SMEs to comply. And then the last is access to capital. And access to capital, like I said, is a function of other things. So the first one is the lack of collateral. A lot of financial institutions, the first thing they will ask for is a collateral. We should find a way of supporting SMEs without necessarily collateralizing financing that we give them. So if you want to invest in an SME, you should actually understand the SME or the sector. So banks have actually confessed that there are certain sectors that it's very difficult to do a risk assessment on. So you will have a blanket situation where banks do not finance primary agriculture. So today, Winston's pig farm, he will struggle to get financing for it because they don't want to finance agriculture because they think that in the next few months or so, something may happen and they will lose their business. That is a risk that the banks or financial institutions should be able to manage. If you have someone who's an agri expert, he will be able to assess the piggery, he will be able to understand how piggeries operate, and he will be able to recommend ways that veterinary officers or agri officers can support these pigs survive beyond a certain age. So you don't have this blanket policy of a case where the bank say we do not finance primary agriculture. The second reason why SMEs do not access the capital is the lack of proper records. A lot of SMEs do not keep proper records, and it is purely cash-based. Businesses, if you ask the average businessman, how much revenue do you make in a day? He will be able to tell you. What is your average price per unit? He will be able to tell you. How much revenue do you make a week? He will be able to tell you. And all that information is in his head. So if he dies, the business dies. That is not a proper way to keep a business to make yourself ready for capital. So SMEs must keep proper records. The lack of proper records or proper documentation makes it difficult for them to access capital. So I think these are the challenges that makes SMEs difficult to access capital. And I guess this is at the high level context.
Wow, that's some fascinating stuff. And I think one of the big things I'm picking from what you're saying is that appearances matter. What you see when you look closely at a business, it will tell you as an investor everything you need to know about whether or not your money is safe when you invest it there. And you talked about why they need to have the right sort of bookkeeping, because you ask them questions about their inflows and outflows, and it's all in their head.
Yes, certainly. Yeah. So a lot of SMEs do not keep proper records, and the records are in their head. And I think what they need to do is, for most SMEs that we deal with, we advise them that engage audit firms. So if you go to the Institute of Chartered Accountants, there are auditors at various levels. So there's a tier 1, tier 2, tier 3 audit firms. So like you go for the ones that you can manage, the ones whose cost you can pay. So there are audit firms that will be able to charge you as low as, let's say, 5,000 Ghana cedis or even 3,000 Ghana cedis to do your audit for you, put your books together for you. So you don't necessarily go to a big accounting firm and then you are faced with a challenge of not being able to pay. for the audit work. So I think that's something that SMEs should be prepared to do. That, look, engage the right auditing firms or accountancy firms to help you put your books together. Because at some point, it's a function of your historical performance. So if you walk to any financial institution or any investor comes to you and he says that, look, I'm ready to support your business, but show me how your performance has been historically. It's a function of your audited accounts. So historically, your audited account should be credible enough for you to do. Also on the projection, a lot of businesses try to run or prepare their projections, and they are not based on facts or things that they will be able to achieve. So for instance, if you walk to the person who has prepared his financial projection for the last 2 years, in 2025, he's projected that he's going to end the year with a revenue of 20,000 Ghana cedis. And in the first 9 months of the year, by the end of September, he's only made, let's say, 9,000. So it means that with 3 months to go, he's likely to end the year about 12,000. But then he's telling you that he's able to end the year at 20,000. By what stretch of imagination? You should be able to explain. It is not necessarily wrong, but you should be able to tell me that in the last quarter of the year, you make about 60% of your revenue. Then I'll be able to understand it. But if the trajectory has been the case that you've been growing month on month at about 1,000 cedis, then that should, for credibility's sake, you should adjust your projections to the realistic estimate. So a lot of them make projections and forecasts based on things that are audacious, ambitious, without any basis or without any basis for the assumptions that they make. And I think that's it. So historically, you should have some very good audited financial statements, and your projections should also be reliable and based on estimates that are based on facts, something that you can explain.
That's interesting. All right, so listen, let's go immediately to how to solve these problems. You've identified so many of them, quite a number of pitfalls that these SMEs face in their bid to access capital. So let's try and practicalize it. All right. So let's imagine I have an idea. I want to start I want to create an app. Wachi.com, an app which is like Uber for Wachi, right?
Food delivery.
Yes. But only for Wachi, please. Yes, let's focus. So I have this my idea. I want Wachi.com. I want to create this Wachi platform. But I have all the problems you've identified. So yes, my idea is in my head. My business plan is in my head. My idea of inflows and outflows is all in my head. Apart from that, I have a product that is easily replicated. Other people might also crowd me out of the market. I have all the things, all the pitfalls you identified. Now, advise me. Walk me through what to do about each of them with Wachi.com, so that I can go into any institution and get capital.
Excellent. So I think we will take the issues one after the other, and we will help our listeners understand how they can start it. So sometimes when we have some of this education, we tell them that the university student with a laptop can start a business that will grow, and in the next 2 or 3 years become bigger than a business that has been in existence for 30 years. Why? Because they've got the right procedure, the right process, and understand how it works. So the first thing I said to you is that, look, if you have this Wachi business, there is nothing wrong with Kojo leaving the Joy FM studio and walking to Auntie Muni at Nima and asking her, what are the challenges with the Wachi business? Ask Auntie Muni, who has been doing the Wachi business for the last 30 years or 40 years of her life, to tell you that sourcing the rice, sourcing the additives and the spices from Agboshi market is the biggest challenge. So when you start your business, you can get a rice, all right, but he tells you that the spices is the major thing. So you have to order that spices for about 3 months in advance, so that it arrives ahead of your launch. So that is a perfect way to do it. So it is not the case that you are starting a business today and it's going to fail. No. But if you have the right partners, which I gave you the example of education sector, that if someone wants to start a school today, and the person that he's starting with is someone who has been in the education sector or a director of education, has been in the education sector for about 40 years, I'm ready to give money to that startup with a person who has that 40 years experience, and to give someone who has been in existence for a long time, but is still struggling to put his business together. So that's the first one. Try and then bring the right partners on board. The second one is also to understand the sector that you are operating in. So if you ask the average person that, look, who are your competitors for watching? It is not the other watching seller. It is the person who is selling the fried yam or by the roadside. So if they are your competitors, how do you differentiate your watching such that the person who is selling fried rice, who is selling jollof rice, is not your direct competitor and taking your customers? That takes us back to the conversation about selling a unique product. So you have to understand your competitive advantage. So how do you make or differentiate your watches? Historically, watches have been in, let's say, leaves, because people think about health. And so you want to put your watch in leaves, packaged in a plastic, so the leaf first before the watch, so that it solves the problem with health. You are also adding things like salads to it. You are also operating the watch in a hygienic environment, not by, let's say, for the sake of argument, the gutter side and all of those. So that is making sure you are
no gutter
the problem
flavor
of differentiation. Yes. Hello.
Yeah. Sorry, I was just despairing at the moving away from the gutter, but I understand.
Gutter, yes, because I know people like the gutter side,
Papa.
because as someone said, it adds to the flavor. But obviously, if you want to differentiate yourself, operate your watch in a very hygienic environment. Then also bring the right people or the right team to help you put the structures together. So the right structures, if I call, some of these delivery companies, you mentioned about starting a delivery business. Sometimes you can call that delivery company for about 20 times before someone answers. That is poor customer service. So who is the person who is going to answer the phone? What is the etiquette, or what are the phone etiquettes that you are giving to the person? So that if the person has to wait, or someone has to wait on the phone for a few minutes, please, sorry, I'll come back to you in 1 hour, or I'll come back to you in 30 minutes, or I'll come back to you in 5 minutes. And the person actually calls back. So that customer and making sure the right structures are in place is also very, very important. And also making sure that you are getting the right source of financing. The right source of financing to start a business is very important. There is what we call the 3 F's to start a business. The first one is family, the second one is friends, and the third F, we call it loosely as fools. People who have money, but they have no use for the money. And so that's why we classify them as fools. So the 3 F's. Always start a business with the 3 F's. Friends, family, and then the fools, or the people who have money, but they don't have use for them. If you start your business with debt, you are not going to be able to sleep at night. And so that's it. You have to get the right source of financing. So call Winston, call Kojo, call George, and the rest of them, and come together to start a business with family, friends, and people who have money to support you, without necessarily asking for interest or asking for repayment within a short time. So you get the right financing for the business. Because if you go for debt to start a business, you come under stress, you start overpricing, and very soon you price yourself out of the market that you're operating in. So I think these are the things that you have to put in place: getting the right governance, getting the right team on board, making sure you have the right management skills, and making sure you are using the right source of financing. And these are the things that you need to take advantage of if you are starting a business.
Georgie, I get your argument about us moving away from debt, but sometimes in the current environment, it is still difficult sometimes to get the friends, the family, even to support, because there's a squeeze in capital in the environment, liquidity squeeze. So the little money they also have, they want to look at themselves. How do you convince these people to place capital in your family if the debt is not the way to go?
Yes, so that's a very good point. And I think for a lot of businesses, I see a lot of Ghanaian businesses are actually comfortable with debt because the equity financiers ask for a lot of terms and difficult for them to meet. So for instance, some of them, the main reason why they don't even go for equity finance is that they don't want their interest or their shareholding to be diluted. But I think a lot of business should understand this fact, that it is better to be a 10% shareholder in a $100 million business than to be a 100% shareholder in a $1 million business. If you're 100% shareholder in a $1 million business, your only return on that investment is $1 million, the value of that business. But if you're a 10% shareholder in a $100 million business, you have $100 or $10 million as your equity stake. So in certain instances, a lot of SMEs should understand that as your business begins to grow, you should be able to bring partners on board who will support with their skill, who will help you expand to other markets. So I see a lot of Ghanaian products that people tout so much. A very good example is Sheto. there is sector that I go to Nigeria and I ask them, and they go like, yes, eating your Ghanaian jollof rice with shito is what made the Ghana jollof the best. But who is doing that shito business? How is the person packaging it? How is the person exporting it? Very soon, as a friend of mine said, the Chinese will steal the shito and they will call it shito and they will come and sell it to us. So if we do not put the right strategies in place and prepare to accept equity investors, yes, it will be very difficult for us to expand. So just to answer your question, there are options available for business beyond debt. So you should be able to convince angel investors. There are people who call themselves angel investors. They go to some of these SME forums. There's what we call SME challenge. You go there, present your business plan, present your business idea, talk about your business. If you convince them, they'll be able to give you capital. And equity capital is patient capital because unlike a loan, which a lot of banks will lend maximum 3 years, the equity investor tells you that I'm with you to the end of your business. So I'm giving you money to you in the next 10 years or even 20 years. Use it for whatever you want to use it for. If you make more money, pay me dividends. That is patient capital. And I think a lot of SMEs should orient themselves moving away from the debt to getting patient capital. There's also capital available that are given to financial institutions targeted at SMEs in certain sectors. So if you walk to any financial institution or bank in Ghana, being the Fidelity, Stanbic, etc., just ask for any what we call program funds. They are given to them by the MasterCard Foundation, the DFIDs or FCDUs, and the international development partners. And they come at concessional rates. So whereas, let's say, some of these development partners will give credit to these financial institutions to be given to SMEs at a rate of, let's say, 7 to 8%. The average borrowing that you get from a commercial bank is about 23%. So make sure you take advantage of some of these SME-oriented funding that's available. And so be prepared to accept funding from sources that you think are cheaper or that you know are cheaper relative to what you have. Sometimes even your family friends' funding may be more expensive because they are asking for returns or they are asking to sit on your board. They are asking to be part of the business that you do not want them to. So it makes it more expensive. So look for alternative sources of financing which are available that we can discuss in detail.
Yeah, let's look at the other side of it. So you've actually done all you're supposed to do. You've done your research. You've put together your books in a way that is completely compliant with anybody who might want to invest in you. You've solved all the problems, right? Now you are ready to receive capital.
Yes.
But you have options.
Yes.
So maybe your idea is so good that you have interest of investors. You also have friends and family willing to put money into it. Your bank is ready to give you a loan. So you even qualify for some of these international donor organizations. So you are qualified on all fronts. What are the factors you should consider before deciding whose financing to accept?
That's a very good one. And I think for us as advisors, we tell our clients that we run what we call a finance challenge. So you'd have a lot of lenders ready or pursuing or looking to invest in your business. But you have to decide whether you want to go for bank A or investor B. That's very important. So the factors you look out for in securing finance from entities, one is what we call the tenor of the facility. The tenor of the loan or the facility or the support that they are giving to you should commensurate with the nature of your business. So for some businesses, they run in seasons. So I am into the business of exportation of cocoa beans. There's a minor season and a major season. So I want just a short-term working capital to support my business. Once the season is over, I don't need that money. So don't go for a 5-year loan when you're into the business of running in seasons. So you realize that you'll be paying interest on a facility when the season has not even started. So go for a working capital that helps you to manage your financing needs, or go for capital that supports your financing needs. So if your business operates in season, support or go for financing or short-term facility, an overdraft facility or something that matches your needs. So that's the first one. So the tenor must match your financing needs. The second one is the interest that you are paying. So technically, you should know that financial institutions compete also on the interest rate that they offer. You should understand and appreciate what rates are being offered by which institution, and also make a case for you to be given specific interest rate that suits your business. So you don't go for a loan or a facility from someone because in the market everybody is going at a rate of 21%. Maybe it will be difficult for you to repay because if you are not making a profit of more than 21%, that interest will be very difficult for you to service. So go for a facility that has an interest rate of, let's say, 10 or even 12%, and then ask around. I gave an example that there are specific funding available for business in the agriculture sector. There's specific funding available for businesses who are into, let's say, manufacturing. And so go for those specific financing. It helps you to mitigate that risk. Then the second one is also to understand the terms of the facility that you are signing on to. A lot of them, when the loan agreements come, a lot of SMEs, when the loan agreement comes, they just sign. And there will be terms, there will be honor terms. So don't look at just the interest rate. Someone may be offering you an interest rate of 15% against a financial institution of 21%. But what you do not know in that agreement, they have a clause that says that if you fail or you default, they have step-in rights. They can come and run the business for you, or they can buy the business from you. So a lot of business have lost their interest to financial institutions. Financial institutions have taken over certain businesses because there was a clause that they call step-in rights, that if you fail to service their loan, they can come in, run the business, sell the assets, and then pay off their loan and then give you whatever is left. So look at the terms of the facility that you are signing on to and get an advisor who understands the terms or who can review. So a lawyer or even a financial expert that can review the terms for you. And a lot of business should note that the term sheet that's given to you is not cast in stone. You can always negotiate your specific terms. So you can push back on the repayment. If they're asking you to repay the loan on monthly basis and you think you will be able to pay it on quarterly basis, ask for that clause to be changed. Like I said, if your business is in seasons, there will be a season you may not have need for that money. Why should you have that facility sitting on your head when you don't have the need for the funding? So you can push back on the tenor of the facility. You can push back on the repayment. You can also push back on clauses such as, let's say, step-in rights or other provisions in the term and the loan agreement that does not necessarily help your business. So in certain instances, they say upon a single default, you are supposed to, or they will take over your business, or upon a single default, there's an interest element that's applied, a penalty interest. You can push back on those businesses. In certain instances, even a processing fee makes the loan more expensive because you are looking for a loan of 10,000 Ghana cedis. They will add a lot of processing fees to it and it ends up becoming 12,000 cedis. So you sign on to a loan starting with 12,000 cedis when you are actually looking for 10,000 cedis. So the terms of the loan facility is also very important. That will help you decide which institution to go for. I think these are just to start with.
Wow, that's great stuff. All right, here's how I think we will wrap things up. So now, Wache.com has got its loan or its funding. Its capital is in place and we've started business. But obviously, we'll have to pay back. And the nature of entrepreneurship and business is that there is so much uncertainty. How do we bring certainty to a realm of uncertainty when it comes to repaying these loans and capital that we have now been able to attract?
Yeah, so I think a lot of business should also appreciate the fact that, yes, if you go for a loan, you will be monitored by the institution that's giving you the capital, because they also have stakeholders whose capital they have taken that has been advanced to you, that has been on-lent to you. So note that you'll be monitored, and you should be transparent. A lot of business hide a lot of information from their lenders or their partners, and that creates problems for them. So be as transparent as possible in your business. If something delays and there's a particular month where your repayment is going to delay, just be honest and be transparent about it so that you will be able to service the loan, or the loan will be structured in a way that helps you. Then the other thing is that you also have an option to refinance the loan that you have. So a few years ago, or even let's say a couple of months ago, banks were giving loans at about 30% or 33%. Today, some financial institutions are giving loans at 20% or even 15%. So the loan facility that you have in your books now, that is running at 36%. Go and refinance with a new facility at 15%. What it means is that you have saved yourself another 15 percentage points on your facility. Because if you are still running the loan at 36% today, and there are banks that are ready to refinance that facility at 15%, why don't you take advantage of the difference in the interest rates? So that's the other thing. And then the second thing is that we should also do our own self-monitoring. You don't have to wait for a bank to come and say that you're about to default or you are not using your business for the right sources before you even report yourself to say. You should have self-monitoring mechanism. You go for a loan from a third party. Make sure that you are running your business in a manner that helps you to repay the loan. If you take a loan facility from a financial institution, use the funds for the purpose for which you have contracted the loan. That information asymmetry or that, let's say, attitude of SMEs create a lot of problems for financial institutions. Someone will tell you that he's going for a loan from a financial institution to import trucks for his business. He goes for the loan and he uses the money to import rice. By the time the rice gets to Ghana, they are either broken or they are rotten, and he's not able to service the loan. So SMEs who are less men, if you go for a loan from a financial institution, use the loan for the purpose for which you went for the loan, because the bank would have done their assessment, they would have done a credit analysis, they would have assessed the market and supported your business because they think that what you have said you're going to use the money for, you'll be able to repay them, and there's market for that product. If you use it for a different product, or if you use it for something else other than what you went for the loan for, that is going to create problem for you, and it's going to create problem for the financial institution. So
yeah, what a godsend you've been, eh? This is some fascinating stuff that you've helped us with this morning. Yeah, I knew we were going to learn a lot. Yaw Appiah Lartey is, of course, partner of strategy and transactions, and also Africa infrastructure and capital projects leader at Deloitte Africa. Yaw, God bless you. Okay.
God bless you too. Thank you very much.
Thanks a lot. Yeah. George, it looks like Wache.com is going to happen now. Yaw has set us up.
I think he's made some very interesting proposals, Kojo. And the argument about the debt, that as a startup, you don't want to start your business with debt. I mean, the established businesses and even established business acumen persons or people like Max Fuga, will tell you about how difficult is it to get the bank loan and even settling it and all the rest. So if you can convince your friends, I know it's difficult. Someone say that, look at what this guy is saying. I mean, if you can convince the friends, the family to believe in the business, it's very, very critical. Or the patient capital he spoke about, or some of these angel investors. But also, could you realize that you can have a good idea to start a business, but you are not the person to drive the growth of that business? And it's very, very critical. Know that my was to start that Wache.com. It gets to a certain point, I need to bring certain people on board to grow that small business. I don't have what it takes to drive that business. 1% of nothing and 1% of 200% is what? Or maybe 200 million is what? So know when to say that, okay, mine was to start the business. I've gotten to that point where I need to bring 10 people on board. Also, the bit about convincing the friends as well. See, can you help me put together my presentation for the bank and all the rest? Need to bring that friends on board to help you because you don't have that money to, hire the experts and all those things. And it's very, very critical. If you can't convince your family and friends to be in that business, then the bank won't come on board. Because don't remember one thing, that money is not free money. That bank that has that money, he is going to borrow that money at a very high rate. He needs to turn that money around to pay back the investors or shareholders. So that is not free capital. And know that everything cannot be in your head. When you are making sales, record it. At the end of the week, what went into it, the cost, the revenue, the sales, because that is needed to convince anyone that this business is on that growth path. Move away from everything being in your head to documenting everything and know that it's a business. If you have to buy Wache from your own Wache firm, pay for it.
Yes.
And don't do it as, it is my business. When the friends, the boys come, let them pay. If the boys support your business, believe in your dream, they will pay for everything that they drink at your bar or restaurant.
Precisely. I mean, that's my friend. I want him to succeed.
Yeah.
Why do I want to be
you can succeed
a cost
you
to
understand
him?
me?
Yeah.
When they come to the restaurant, they have to pay for it.
Yes. Yeah, absolutely. Now, George, I realize that there might be some cultural considerations as well, right? Because I realize that in business in Ghana, people are not inclined towards partnerships, which is why they would probably choose a loan over an equity investor, right? Or, a patient capital. Just because they want to be the owner. They want it to be their property. The partnership model doesn't seem as desirable to the typical Ghanaian.
I think it's the phobia, Kojo, and some will share their experience.
Nipaya bad, right?
Kind of, where I've gone into partnership with friends and what has happened.
Yeah.
There's this even argument about documenting everything that when they sold that business idea to those angel investors, the next thing they saw was that big firm was rolling out that idea.
Yes.
So it's a challenge, trying to convince these people that, document everything, bring people on board to support your business, go into partnership, because they've done that and they've been bought out, they've been pushed out of the business, and the experiences are nothing to write home about.
But also, I think it would be important for us to understand as a people that you winning doesn't require someone else to lose.
Yeah.
Right?
Yeah.
I think that's what makes people go into business and cheat each other, because they think that there must be a winner, and in order for there to be a winner, there must be a loser. So I must win for you to lose, right? They don't understand that partnership means that we all bring in something, we all sacrifice something, and when the win comes, it's for us all, right? So you find a partner who is interested in your business, can bring in capital, but also perhaps has expertise when it comes to marketing.
Because
right?
also, you talk about marketing, also networking, and also in accounting, they'll say goodwill.
Yes.
Kojo might not necessarily have the capital, but Kojo coming on board can lead you to those who have the capital.
Yes.
Kojo can help you deal with the regulatory challenges. Kojo can help you reach out to the angel investors.
By the way, Kojo can actually do all these things. So call Kojo.
Can Kojo convert all those things into equity in that business? So don't just look at the capital. If that person is bringing all these things on board, at the end of the day, if his network, if he's connected, can I say, because of all these things, Kojo, I'm giving you maybe 10% in this business, but you're not necessarily bringing in fresh capital.
You're bringing in sweat equity, right? Yeah, I like that. Listen, there are so many ways to skin a cat. Just as many ways to fund a business. To fund a business.
Not a cat hunter. That's like what the former president said.
Yeah. There are just as many ways to fund a business. So let's get creative. Let's start talking to each other. Let's start leveraging our strengths. And let's be prepared. Right? Let's put it all on pen and paper. Put it all on paper with pen, right? Yes. Let's put it all on paper.
You can also type as well.
Yeah, I mean, you know what I mean. I said pen and paper. I had to correct that. Yeah, let's put it all on paper, okay? And once our plan is solid, it's clear, we've done the research, we've figured out all the possible pitfalls, and we found a way around them, and we are solidly prepared, the money will come. I wish you all the very best of luck out there. And of course, thank you to all the SMEs who gave us the insights for this conversation, right? The SME Fair was an invaluable source of information, and it's because of that this conversation has been made possible today.
I mean, 21 gun salute to these small businesses out there. Some are really breaking their backs to survive in the system.
Yeah.